and welcome. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. And these are the top headlines that we're tracking at this hour. The Nifty trades below the 10,000 mark as all the major indices trade in the red. The Sensex loses nearly 400 points in trade. The rupee is set for its third weekly drop as geopolitical tensions weigh on global currencies. The Nifty Metal Index is the worst sectoral performer today as global metal prices fall. Hindalco falls the most in over a month. And Reliance Communications lenders reach out to the company seeking reassurance that proposed deleveraging deals will not be delayed by recent developments.
Well, the markets are a sea of red, quite frankly. We are sub the 10,000 mark and convincingly so, trading at the lowest point of the day. The Sensex is down about 400 points and the broader markets are not faring too well either. So let's bring up the Sensex, let's bring up the mid caps, small caps and the bank nifty as well. And you will see what I'm talking about. There's a dark bit of red across the screen. Look at that, 2.5% apiece for the mid caps and the small cap space as well. The market breadth should also come up on your screen before we get in the nifty heat map. And suffice to say that it will be a terrible picture. Just look at this. We started off with a gap, yes, but it's been a yawning gap and it's only opened up in the last 30 odd minutes of trade. So close to 1:7 in favor of the declines. That's not a really healthy number at all. Bring up the nifty heat map. I really doubt that there will be too many stocks which will be in the green. No, not too much. Just an HCL Tech, for example, which is up about a couple of percentage points, and maybe to an extent Bharti Infra. But otherwise, it's a tick of red across. A lot of banks, ICICI and Yes Bank, and a lot of commodity names. So that's essentially the picture. Just bring up the contributors and show you what is really moving the index off. ICICI Bank, the top contributor on the losing side. HDFC Bank has about 10 points. Reliance, L&T, and think about it. It doesn't have any of the commodity names, the top 4 contributors. If you pile on the commodity names as well, you will realize it's a really, really bleak picture in the session today. HCL Tech may be just trying to counter a little bit on the upside. Last but not the least, I just want to get in what the turnover is looking like in the session today. I wouldn't be surprised if the turnover is on the higher side. NSE F&O, yes, much higher. Their cash volumes are off or pretty much at par, but there's NSE F&O turnover fairly high in trade today. Pradeep, what about the broader end of the spectrum?
So again, we look at financials, like you mentioned, ICICI and HDFC Bank. We look at the second line, mid-cap stocks, Reliance Capital, Diwan Housing, and we can see significant pressure at these counter. What is also important today, so far we have been talking about selling pressure here and there in some stocks, mid-cap and small cap space, but not with significant volume. Today, for the first time in last 3-4 sessions when mid-caps selectively have remained under pressure, today not only we have a clear advanced decline ratio favoring decliners, but we also have volume support. You can also look at real estate counters like IB Real, Sunteck Realty and Peninsula Land. Well, these two are interesting because IB Real is a high beta stock, traders favorite, but Sunteck and Peninsula are favorite with HNIs and portfolio managers. So if these stocks are also falling with good volume, does that mean the pain is probably deeper in the market? Well, we'll talk about it later. But we also have commodity stocks like Niraj mentioned. You have JSPL, Graphite and Nalco. Also look at ITDC and Tourism Finance. Well, these two stocks have been moving up with significant volumes, and today they also see a deep correction. Last trading day, maybe traders prefer to stay light. So these stocks that have been favorite till yesterday or day before are now suffering. But you have ITI leading second day in a row, up 16%. So 20% circuit yesterday and now 16%. That is on the back of a huge 7,000 crore rupees order that they have received. And also, last but not the least, Sanghay Industries. This stock is up with good volume. Well, that is thanks to a block deal that happened this morning, around 0.5% of equity. Not a big block though, but this stock has been trending up in a weak market.
Okay. Let's take it to our experts and try and figure out how to approach trade this afternoon. Nuresh Mirani is with us to talk about his thoughts on the markets and specific stocks as well. Nuresh, good afternoon. Thanks so much for joining in. Is there an index strategy that one can initiate after the fall that we've had today, either the Nifty or the Bank Nifty for that matter?
So if we look at Nifty, we have a higher top and higher bottom formation. We go back to a last bottom at 9,700. And maybe a trend light support comes around 9,900, 9,950. So a contrarian trade to this market would be to buy in that zone around 9,900 to 9,950. If it comes with a stop loss at 98.70, and maybe a pullback to 10,000, 10,050 levels. So that would be a strategy in terms of a contrarian trade from current levels.
Okay. And what about specific stocks, Naresh, for the day?
So for specific stocks, one stock which I like is Tata Chemicals, around 615, 620. Last breakout point was around that 600, 620 mark, with a stop loss at 600 and maybe a target price of 660. The next one is a mid-cap stock which could be a breakout candidate going ahead, which is Hikal or Hikal, which is around 220 to 225 levels, with a target price of say 260 in the medium term.
Okay, Naresh, actually, if you look at it, there is significant pressure across the board in financial services. You look at NBFCs, you look at microfinance, you look at private sector banks. All these stocks have been moving up so far. Do you see some kind of topping out pattern in the intermediate term? You'll stay away or find some shorts?
So in the near term, we would have topped out on a lot of sectors which were doing really well, because the new high which we made about 10,150, there was no momentum even in the banking stocks per se. So a lot of stocks like Kotak Mahindra Bank or HDFC Bank made new highs, but there were no great volumes or price action. So in the near term, they may top out and we may wait for a pullback from 9,900, and if that crosses back, then we may say, okay, the trend is back. So till in the near term, you will be on an avoid. The better way to go is with a Nifty, where at least your stops can be executed if we have a gap down going ahead someday.
Well, clearly the volatility seems to be on the higher side today, as India VIX has inched higher by almost 7.5 to 8%. It is inching very closer to the mark 13. We will discuss the metal space in detail, but at the time being, you've got stock like Hindalco, which is your top loser in Nifty. That's down about nearly 5%. In fact, Naresh, any call here? Would you recommend taking any fresh positions in Hindalco?
So, like say, we've seen the first indication of a trend change in Hindalco and various metal stocks. So I would say we would just wait out the move. Even shorting at current levels would be a good strategy, but the stop losses will be a bit higher for a trader, given that the stock is already around 5-6%. So maybe today's high would be a stop loss and it would be a short across the metal names.
Okay, Anand Tandon, of course, joins in on the fundamental end as well. Anand, good afternoon. Thanks so much for joining in. What's really happening? Is it a bit of a scare that's happening because of global factors, or are people worried about growth or a couple of other concerns that have started to creep in the domestic front?
The list of concerns is actually very large, but so far the markets have not shown any signs of paying any attention to that. I would not put too much on in terms of one-day move. If this move were to continue, however, it would of course mean that we could have a sizable correction. Given where we are in terms of the growth versus the valuation, obviously a decent correction is warranted. But so far, as I said, the markets have chosen to ignore all the warning signs.
Okay. So Anand, what do you really think, the last time around when US started tightening, when they for the first time talked about tapering the QE, we saw a panic reaction both in Indian equity market as well as in currency, that is rupee. Do you think in terms of direction, at least, if not in terms of degree or the extent, we are going the same way? Could there be a deeper correction because of what's happening in US?
I think last time around it was a bit of a surprise. Since then it has been widely broadcast and anticipated, and in fact much delayed. So if there is a tightening, the question is whether you're going to reduce the size of the balance sheet or you're going to raise the interest rates. Right now interest rates are not apparently going to be tinkered with, though the balance sheet size may reduce. Also, I don't think that there's going to be any sharp reduction in balance sheet either, given the kind of growth that we've seen over the last few years. It is likely that the movement to reduce it will be very narrow. That will, of course, put some liquidity pressure overall in the global markets. But then, markets have already inflated quite a bit, and the rally that we have seen in India is actually mirrored across the world, including in developed markets. So, will there be a correction? Possibly, but not necessarily because it is something unexpected. I don't expect any kind of similarity to the last time that we had a shrinkage coming out because of the Fed.
There's a bit of a gash in the markets for sure. The broader markets too have corrected. Let's put the spotlight on the sector of the day, and that is the metal index, which has fallen the most since August 11, 2017. Stocks like Hindalco, NMDC, a couple of others have seen cuts of over 5%, 4 to 6% actually. I don't know if the China's rebar futures have fallen for 4 days in a row. The Chinese markets reacted to the downgrade that S&P gave to China as well in trade yesterday. In the last 3 sessions across the board, we've seen some corrections. Iron ore futures have been in focus as well. They have seen the biggest intraday launch in the last 4 months and have shed almost 9% in the last 4 trading sessions. So this one pocket that is clearly putting a lot of pressure within the commodity space, at least, though not contributing as much to the Nifty fall, because the top 4 contributors on the Nifty are not commodity names, but commodities by and large are under pressure. Sudeep Bandyopadhyay joins in with his thoughts on the markets as well. Sudeep, really good of you to join us on BloombergQuint. It's the inaugural week, and it's special to have friends like you on the show.
Thank you.
Just wondering, Sudeep, you can blame some bit of the fall today on commodities, but if you look at what's really happened in the last 45 minutes to 1 hour, the top reasons why the index is doing what it is doing is not commodities. That's Banking stocks have fallen. A couple of oil and gas names are off as well. You could maybe argue them as commodities, but not essentially base metals. Is this the start of a risk off, or do you believe this is just a temporary phase which will get bought into?
Well, to an extent, Niraj, this is a temporary phase. Look, what's happening is we have suddenly realized that the macroeconomic factors are not what they should be. So that's a big concern. Of course, US Fed has come back and they have started talking about easing the QE. They have started talking about raising the interest rates. And on the back of all this, I think our valuations were nothing very comfortable. So all put together, suddenly I think there is a little bit of a risk off as far as global investors are concerned. And I think domestic investors also are a bit hesitant before they go all out and start buying. For a market which has gone up so much in the last few months, a little bit of correction is not bad, but I don't think this is a signal that the markets have turned. I think it's a blip. I believe that at lower levels we will again see buying coming back. So I don't think it's too much of a worry, but of course macro needs to be in place, and the government is taking steps for that.
Well, clearly, in fact, Niraj, if you look at today's fall, looks like there is no support from the domestic institutions which have been buying for the past few sessions. Sudeep, if the market template, according to you, remains the same, if this is a temporary blip, if somebody has to put in money now at these levels, which were the sectors or other stocks that you would recommend?
Well, I think, we have been bullish selectively in FMCG, selectively in some of the pharma names, and also some of the companies which are kind of based on the consumption story in India, and some companies where restructuring has happened. So, I'll talk about an automobile company like Tata Motors. You will remember, Niraj, we have been bullish on it for quite some time, and I continue to remain very bullish. It's on that global JLR story, as well as recovery of demand in India for the commercial vehicles. The valuation wise, I think it's very, very attractive even now. Whether I'll buy today or I'll wait for a couple of days, maybe I'll wait for a couple of days, but I think it's definitely worth.
By a couple of days, you meaning some time, right? Because you don't know when this fall, if
exactly,
at all.
Exactly. So if it's falling, why rush in today? So, as somebody who's advising retail investors, I'll probably wait. But for an institutional investor point of view, or for a mutual fund which is sitting on large money, maybe they'll start looking at it sooner.
So this is the theory, that has been doing the rounds in market, that because there is so much liquidity coming in, if FIIs take out $1 from the market, DIIs come in with $3 at the same time on an average. But is this the right theory really to work with? I mean, is there a compulsion? Or DIIs also have an option. Can't they wait out for a month or two? I mean, if you see there is going to be a big reversal in global equity markets, like we have seen in commodities.
Well, Pradeep, I think it's a bit of both. So they have some amount of compulsion and peer pressure, because they have to handle the NAV on a day-to-day basis. So they don't want to be left out. Well, that cannot be a business rationale, but it happens that way many times. On the other hand, if you look at the business rationale, I think some of the companies, as I was talking about, valuation-wise, if you look at what they're going to do in the near future and what kind of multiples they're quoting vis-a-vis the peers, they still look attractive, and they probably are becoming a little more attractive, as things are happening today.
Anand, I just want to get you in on the sector of the day as well. I'm sure Sudeep would have some thoughts too, but commodities and base metals. Anand, what would you be doing here? Because this has been one pocket that has had a splendid rally. Are we coming to the first steps of a downward spiral or a slide, or is it very, very difficult to preempt that right now?
So if you, first of all, I must admit that, I don't track commodities as closely as I do some of the other sectors. More importantly, because many of them are global commodities, I believe that, the advantage that we have or the edge we have in understanding that is somewhat limited. With that caveat, I would say that the major reason for increase in commodity prices has nothing to do with the underlying demand, either locally or globally. What has happened simply is that there has been a cutback on the supply side because of China's action. There is only that much that one can do by cutting back supply in terms of raising prices. At the end of the day, demand has to pick up, and I don't see any substantive increase in demand from any source. Does that mean that the cycle is over? Not necessarily. The current prices are such that you will still make seriously more money than what you were making even a few quarters back for many of these stocks. So you may find that going forward, if the current prices were to sustain, then the stock prices may actually come back again. But in terms of the fundamentals, I think they continue to remain somewhat weak because the demand that drives this is not visible to my mind.
Okay, but what's interesting today, in today's trade, the stocks are falling with good volume. For example, if you look at Hindalco, since we are talking about metal, right now, you look at the volume at this counter and the story remains the same, whichever metal stock you look at. For example, Nalco never came on my screen, but today it's one of the volume buzzers. Hindalco is right now the one that you could see, and if you look at the two graph, really there's a blue line going up and there is a white and yellow. So the blue line is the 20 days average on volume, and you look at the white graph which is going up is today's volume. So you could clearly see above average volume seen at this counter, and the yellow portion of that graph is actually the projection what we expect till the end of the day. By 3:30 we'll definitely have at least 30% higher volume than average at Hindalco's counter. That is what this chart really tells you. Sudeep, since you track commodities closely, I believe, if you look at it, this is actually an engineered slowdown in China. They are trying to clean up the mess in certain sectors, and they are actually curtailing the number of units that exist. Therefore, your iron ore is down. Therefore, the demand coming from China in global market for aluminium, copper, and all these base metals is also falling. So you can probably take a guess what will happen if the drivers were the real economic drivers. But this is the policy of a government. So we have to simply turn bearish on metal. How will it really play out?
I think, Pradeep, we have been a little cautious on metals for some time, and we believe that this is on the cards. Suddenly it had shot up quite a bit, and there was an attempt by the Chinese government to cool things down. Also remember, winter is coming, and winter is normally a slower period for some of these metals. So we have to be careful as far as this metal pack is concerned. We have been reasonably bullish on the mining companies, not the metal companies. So I still maintain my view that if somebody has to play this entire space, they should look at the companies which are mining the metals. So
Nalco, you mean?
Yeah, Hindustan Zinc and NMDC. These are the companies which I believe still have a long way to go if you take a period of 1 year plus. Because I think that's the space where a lot of mines have been shut down, a lot of restructuring has happened, and that's an area where I think these companies will continue to make money. One can look at these companies even at current level, not the Hindalcos and Nalcos of the world.
Well, clearly metals will continue to be in focus as China gets downgraded by S&P. In fact, start of the year, I guess in the month of March or April, IMF too had issued a warning saying that there could be some near-term disruptions for Chinese economy because they have to reduce their reliance on credit growth, which they have been doing in the past few years in order to meet their growth targets. But let's move on and talk about the Fab 4 stocks of the day. And Yash Upadhyay is here to take us through the same. Hi, Yash.
Good afternoon, Navneet. So we have Ashapura Intimates gaining in trade today. The stock was up more than 6% to hit a fresh 52-week high of 507 on the NSE after the company announced the launch of its brand new line of clothing for men, kids and toddlers. We have NDTV locked in an upper circuit of 5% after there was a piece of news suggesting that Ajay Singh of SpiceJet is likely to acquire majority stake in the company. However, the company clarified earlier in the day that all these rumors were in fact false. Dena Bank is up as much as 3%. The stock had gained close to 9%, hitting a fresh 3 months high after the rumors suggested that the company is likely to enter into a merger with Vijaya Bank. And lastly, rounding off the Fab 4 on a weekend, we have Eros International gaining in trade. The company is up about 2.5–3% after there were reports suggesting that the company's online streaming platform Eros Media has entered into a deal with Dharma Productions for a contract aggregation deal.
Okay, thanks a lot for that, Yash. So those are some key stocks in news. Sudeep, well, if Ajay Singh's history is anything to go by, maybe investors could make money, but it's a diverse sector, a lot of leaders already in place. Is NDTV something you would touch as a stock?
Well, I don't think I will touch. You're absolutely right. There are too many players. There is too much of competition, and NDTV has lost quite a bit of ground to many of the entrants who came in much after NDTV. Yes, his track record is kind of great. He has done wonders with SpiceJet. When everybody had written off SpiceJet, he has come and turned it around, undoubtedly. But I think NDTV is a different ball game. I'll also mention that this probably has a little bit of a political overtone as well. I'll leave that for the time being.
Niraj, NDTV for the last 3 or 4 years have been posting losses, and it is projected that for FY18 also they could be posting losses. So I'll be surprised if he actually goes ahead and turns around NDTV like he did for SpiceJet.
Yeah, but I mean, that would be the classic game, right? You come in, buy a product when it is available cheap.
Right.
Again, we're not saying that it's a done deal. We're not saying that all of this will happen. Sudeep himself is saying that it's there could be a lot between the cup and the lip, quite frankly. So you don't quite really know whether all of this will go through or no. But the stock has been abuzz for the past few days. It's up about 5% today, despite all of these things. Because
for sure, it
of
could
the
be
news
available cheap. It's negative book value as of now for NDTV.
Yeah, so that's interesting. But hey, so NDTV is one. What's happening with banks today is fairly interesting too. So yesterday, Yes Bank spoke about some job cuts as well. I would really doubt that's the principal reason, but yes, ICICI and a few others have come off in this session today and come off quite rapidly. HDFC Bank is the second top contributor to the Nifty fall in the session today. Anand, across the board, the conversations have been that don't look at the corporate facing banks, don't look at PSUs. The other private banks would be interesting. The valuations seem stretched, but they are a safe place to be in. What would you do? I'm not talking about the current levels. I'm not talking about going and buying today. But should this correction last for a few days longer? If it does, are private banks a good place to explore the opportunity of shopping?
So let me break that up into two. On a strategic basis, there is no question that the private sector will continue to gain market share over the public sector. And therefore, the growth rates will outstrip the private sector growth rates will outstrip the overall industry growth rates. So if you have to be in banking, clearly the private sector banks are the ones you have to be looking at. On a more near-term matter, I think the issue is that the only thing that has been moving so far is interest or loan-led consumption growth. There is nothing else in this economy which is moving and has not moved for a very long time, and that is why all consumption themes have been done to death. How long can that last in a situation where there is no job growth and where there is no GDP growth is a question that we have to worry about. The only area, for example, where white collar jobs were being added in any substantial numbers were, for example, the financial sector. And now you have seen the reversal of that as well. So I'm at a loss to figure out where the new jobs will come from. And without the jobs, I don't see how consumption can continue ad infinitum. Therefore, I think even from a consumption theme point of view, I think the theme is currently overdone, but that's a strategic allocation cost.
Niraj, do you see a trade in Yes Bank on the short side? Because you just look at the volume today, the total turnover at Yes Bank counter is higher than HDFC, higher than HDFC Bank. So if you look at the market cap, this is a much smaller bank relatively. Is there a clear short?
So if you look at Yes Bank, for the last 4 days, it was moving up slowly from 370 to 375, 380. Today, it has taken out all the candles for the last few days. So the momentum is clearly on the way down. So maybe a stop at 370, one could be looking at a target price of 345, 350. in the extreme short term, could be lower also. So the last bottom is closer to 340 levels. So that would be a trade in the near term, going short at current levels.
Is there a better banking trade than Yes Bank?
I would say this is the more volatile one. So on the short side, this is the one to go for.
Yeah, you never know. Maybe you find some others as well. Navneet, you haven't spotted anything on the F&O space which could enter into the ban. Yesterday you mentioned about Reliance Communications, and Pat, it was in the ban today.
Just preempted my move. I was coming to that, Niraj. In fact, the Nifty Realty Index today, well, Nifty Metals is your top sectoral loser, but have a look at the constituents of Nifty Realty. That index is also down over 3%. And look at the biggest loser. It's actually DLF. That stock's down about 6%. If you could just pull up the DLF futures. Yesterday, if you look at the overall open interest in the futures and options segment, had surpassed the 92% limit of the market-wide position limit. And if you look at the open interest addition today, it looks like that this could enter into the ban period. We're not sure yet. It all depends on the data which we get post the market hours. So, but Niraj, if you look at the accumulation, even on certain strike on the option side, there has been a lot of open interest addition. As of now, if you go by the current edition, it looks like that it could enter into the ban period for Monday's trading session.
That could be interesting. Mukesh Singh of Neela Financial Services is also with us. Just a quick trade question before we move back to fundamentals as well. Mukesh, starting off with, we're talking about real estate right now. DLF or any of the other counters, do they look apt for a trade right now?
Not really, Niraj. If at all, if one has to trade, one wants to trade into this reality space, then DLF itself has tested this 200 DEMA, which is placed around 171, 172. If at all, if someone wants to play this particular space, then this seems to be the stock. Around 172, one can buy. Strict stop placed below 167 for upside push towards 185, 186. But this is going against the grain. I mean, it has just tested the long-term support. That's why I'm giving this as a probable buy.
Pradeep, will you be a buyer on dips at real estate counters?
Selectively, yes, but I have better strategies. But if I have to, let's say, buy real estate, probably I will go and buy Godrej Industries. I will get a part of real estate through that counter, and there are a lot of value unlocking happening in that company. So I will play real estate probably through Godrej Industries.
And Godrej Property, I guess, is still holding up in green in today's trading session as we speak, the only lone gainer on the Nifty Realty Index. But just going back a little bit on the trends for the markets, Nifty, as we know, has already breached the 20-day moving average of 995 there, currently trading at 9978. Even if you look at the options data today, there's been huge amount of call writing that you're seeing on various strike from the likes of 10,100. That's added almost 37 lakh shares. We normally don't see that on a normal day. 10,200 has also added about 22 lakhs. So clearly indicating, Niraj, the near-term trend for the market could be on the downside. The expiry is on Thursday. So till then, you could see market consolidating around these levels, or there could be further downside.
Well, okay. So, well, Nuresh has said that he would probably not go out and initiate a short at these levels. Let's probably ask Mukesh about his strategy. Mukesh, anything on the index that you're doing, either the Nifty or the Bank Nifty?
Yeah, yesterday, Niraj, it seemed that this corrective decline has started once it broke that 10,140 area, and I was expecting a push towards 99.25, 99.50. The ferocity of the decline is frightening. But having said that, I mean, till such time this Nifty does not move much below 9,900, I will give benefit of doubt to the bulls. This particular shakeout seems to be just a shakeout, rather than anything meaningful building on the downside. I will wait for a push lower towards 99.50, 99.25 area to buy fresh. Stop would be 98.70 for a probable retest of 10,180 to 10,200 area by Diwali.
Okay, just a quick thought, Sudeep, on the new kid on the block and the resultant impact that we're seeing. Not a resultant impact really, but a bit of a correction that we're seeing in Reliance Capital as well. Reliance Home Finance listing, I think below what people anticipated. I think the expectations were about 125, 130 or thereabouts. It's at 107 currently. And Reliance Capital is cracked big time in trade today. Any thoughts?
Well, I think, Reliance Home Finance has a long way to go before they can command a valuation of a LIC Housing Finance or some of the housing finance stars. Today was not a great day for a listing because there was a pressure on the markets. So I won't put too much on today's price as far as listing of Reliance Home is concerned. As far as Reliance Capital is concerned, the whole banking and NBFC has cracked today. There is a concern because of what's happening overall as far as US markets are concerned and Indian markets are concerned. Interest rates are not going to come down. It's very clear in the economy in the near future. And that obviously puts a pressure on NBFCs who necessarily borrow for their operations. So their cost of funds are not going to go down. It's rather going to go up. So obviously there will be a concern as far as NBFCs are concerned in a scenario like today's. So kind of a structural thing as far as NBFCs and Reliance Capital.
The other thing, Pradeep, is that there were a couple of notes which came about, which and clearly we saw the cost of funds for HFCs go up in the previous quarter as well. There was a sharp spike up there. There are question marks on asset quality pressures coming in even for HFCs. Forget the other NBFCs too. I mean, we've seen what happened with Aspire and thereby Motilal Oswal in the last quarter. Would you take money off the table in any of the large NBFCs? They've had a dream run until now.
Well, I think it's a very difficult question. As far as HFCs are concerned, I think I'll be a little cautious. Because not of their new book which they're going to create, but the old book which they already have. Look at a situation like what's happening with the Jayaprakash home buyers. They haven't got property, they have lost everything, and they are still repaying installments to the HFCs. And somewhere that probably is getting, that kind of a situation is creating some dissonance, and that's going to create problem with the HFCs. As far as overall NBFC space is concerned, I think some of the NBFCs, niche NBFCs, are doing fantastic business. And the other positive, wind they have on their back is banks are losing ground. NBFCs are going to get market share, and that's definitely going to happen over the next 10-15 years. So NBFCs definitely are going to do good in the long term. Yes, temporarily there may be some setbacks on account of interest.
Okay. Stay on, gentlemen. So much more to speak about. We have a corporate voice joining in as well. Remember, despite the monsoon being close to normal, if you're in Bombay, I think it's above normal, but close to normal for rest of the country, deficiency in some of the key areas has thrown a spanner in the growth prospects of certain companies. IDFC Security believes one of those companies is Dhanuka Agritech. In a note, they have said that the company is set to face near-term headwinds due to the low water levels in the reservoirs. Joining us to take us through this intuition or this research of IDFC's Mr. M.K. Dhanuka, the Managing Director at Dhanuka Agritech. Good having you, sir. Thanks so much for joining in. Is there pressure? Could there be pressure because of low water levels in the reservoirs for Dhanuka Agritech?
No, there is no big pressure, but definitely because the rainfall was delayed in South India, especially Andhra, Karnataka, Tamil Nadu, Maharashtra, the season has been delayed and growth has not been as was expected. But still, Dhanuka hopes that we will be able to deliver double-digit growth by September ending.
So the states where you are, prominently present, MP, UP, Telangana and Karnataka, I believe MP is really suffering a significant deficiency this season. What's your assessment so far?
Yeah, you are absolutely right that MP is suffering from deficit of water, and definitely the farmers will switch over from wheat to gram in MP state where the water requirement is less. So that switch will happen, and we have number of molecules for sales on gram. So we hope that we will be able to do the desired volumes in MP also, irrespective of deficit of water in MP.
Mr. Dhanuka, just switching focus to your financials and also about GST implementation, which I believe was not so positive for a company like yours. Just want to get a check. In the coming quarters, do we see any sort of GST impact, or it's factored in already?
No, definitely there was impact even in the first 15-20 days of July, but now things have been has streamlined and everything has been normalized, and we don't foresee in by September end we will be able to have around 10% growth. Although the initial projection was 15% growth targets, but because of the erratic rainfall, the growth is expected between 10 to 12% by the year end.
Okay, thanks a lot, Mr. Dhanuka, for joining us. So that's an update on monsoon, and there could be some impact, but company believes that the shifting in crop pattern may not really adversely affect them when it comes to their overall product profile, so to say. And let's have a look at how European markets are doing. They open flat to negative actually globally. Equity markets are not looking so bullish, although there is no selling pressure like what we have seen so far in India. If you look at Europe now, it is recovering. So we are probably standing out in terms of the extent of selling, the bearishness seen. Europe is actually flat to positive, especially CAC in France is up by around 0.25%, although FTSE is flat. I think they're also waiting for that all-important Prime Minister's speech and further clarity on the Brexit rollout, looks like. Well, we'll move ahead and we'll look at some other developments with the oil rigs and refineries devastated with the hurricane in US this time around, and with dollar appreciating. Will there be more tailwinds for the Indian players in the oil and gas space? To give us a broader perspective on this, joining us now is Scott Darling. He is the head of regional oil and gas for Asia Pacific region at JP Morgan. Well, thanks a lot, Scott, for joining us. Do you think that crude oil has probably is all set to move out of the range we have seen for last so many months, $40 to $55? That has been the range. Do you think now we are moving up to a new range, maybe 55 to 65 or higher?
No, I mean, JP Morgan next year, for example, forecasts $45 Brent. And I think if you actually look at the outlook, oil demand growth in the world is particularly robust. I think next year US shale sort of adds 1 million barrels per day or so. I think where we're slightly different as a house versus the street in terms of our oil view is sort of around other FSU supply, former Soviet Union countries' supply outlook, where we're slightly higher. And also on non-OPEC supply, we're slightly different to the street. But no, I think as we go into, when the hurricane impacts sort of abate or are abating, unless there's a particularly cold northern hemisphere winter, I think probably oil sort of remains broadly where it is at the moment, and I think possibly a little bit more downside risks as we go into next year. Okay.
And what's your call on Indian listed equities in this sector, oil and gas sector?
Overall, we've liked some of the oil marketing companies. IOCL, for example, is one of our key picks. As a house, we're broadly constructive on the refining cycle. We think net refining additions don't outpace oil demand growth next year. You're also seeing higher incidence of sort of governments pushing the sort of fuel, tightening fuel specs, and therefore that gives higher incidence to maintenance over the sort of seasonal maintenance periods each couple of times each year. Therefore, there's more uplift potentially during those periods to margins. So I think refining profitability, say this fiscal year in India and possibly even next fiscal year, could actually be solid. And obviously that helps those exposed there.
Mm-hmm. Well, that is to talk about the oil marketing companies. But if you look at the refining side, do you expect companies like Reliance to maintain the premium they have earned so far over the regional benchmarks?
Look, I think when you come to look at some of the crude differentials, I mean, it's a good question. I actually think where we are with differentials probably continues into next year. And why we'd say that is I could see sort of the lighter end of your light-heavy spread under pressure as shale recovers into next year. At the same time, if you don't see compliance, and we're right on OPEC, then your heavy barrels are less tight, and therefore that keeps the spread broadly narrow. I mean, in general, if you look at companies like Reliance, of course, because of their high complexity, they will command or continue to command particularly good premium versus your average GRM in Asia.
Thanks a lot, Scott, for taking time out. That was Scott Darling joining us on the sidelines of JP Morgan India conference. What JP Morgan view is, Pradeep, they see oil between $45 and $55, so they are not really looking at a breakout and a new range that probably OPEC and non-OPEC suppliers are kind of trying to arrive at. There is an all-important meeting happening today. Sounds good, at least for India. What does it mean for the listed companies? Where would you really focus, and what's your view on crude actually?
Well, I'll start from our view on crude. I think, Pradeep, I kind of agree with the view which was just given. I don't believe oil is going to go anywhere, in the range of 60 plus. So if it moves up, it'll still hover around 55 maximum. So the 45 to 55 is the range where we think oil will keep hovering. Unless, of course, there is a major geopolitical tension or geopolitical event. As far as the stocks are concerned, I mean, we have been bullish on Reliance for some time. We continue to remain bullish, predominantly on the back of course, its oil and gas business, refining business, and also the value which is being created through Jio. It's a little controversial subject, but I think the value creation is definitely happening through Jio. The retail piece is still not getting valued. It's the largest retailer in the country today, but it's not getting valued properly. So there is value sitting in Reliance even today at current levels. If I have to pick up some of the stocks, probably I'll go for the gas distribution companies. With the national grid getting established and getting firmed up, I think the gas distribution companies for the next few years are going to do exceedingly well. So whether it's an IGL or Mahanagar, I think one can look at that.
All right, so look at IGL or Mahanagar. One pocket which is marginally outperforming a couple of your IT stocks today. So the likes of HCL Technologies and Wipro both are trading in the green. Anand, do you find any value in any of these IT stocks? We've spoken enough how the valuations of these stocks have corrected, how they've become value stocks from being growth stocks. But if you were to put your money in any of these IT counters, which one would that be?
I think when you say value, it is not as if you can have value without growth, and growth is certainly not something that the large companies are seeing. I think they will continue to struggle with near single digit or less, just about double digit kind of growth for the frontline companies. And therefore, if you have to look at IT, I think some of the more specialized niche players, the smaller companies, will probably do better in terms of being able to deliver growth. The good thing about IT is that it doesn't have a problem in terms of debt by and large, and therefore it can be a defensive, especially if the rupee starts to fall again, which seems somewhat likely right now. So from a portfolio perspective, I think you may want to be somewhat neutral towards the sector, not necessarily towards the large cap in the sector.
Yeah, I'm not surprised with Anand's answer. I kind of preempted him saying this because for the longest time that now having spoken to Anand, at least the last 6 to 9 months, maybe more, I haven't heard Anand being too constructive. He's by and large been cautious, except for certain pockets wherein he's with Sean and Anand. If I'm not wrong, the conversations that we've had in the recent past, you've come up with some interesting sum of the part valuation stories, so on and so forth. I remember a conversation that we had on air on Max Ventures. I think we also spoke about Aditya Birla Group and the demerger and the subsequent remerger, so on and so forth. Is there a pocket that you're bullish on right now at all?
So, it depends on the time frame you're looking at. On a 3 to 4 year time frame, I think you'll find companies which will make money. On a purely tactical point of view, I believe that, restructuring and especially demergers do tend to create outperformance, not necessarily money. Obviously, in a bullish market, it makes you a lot of money and perhaps more than the market. But broadly, I think that seems to have worked very well over the last several years. And some studies have shown that they continue to do well globally. So there are several companies even now which are in the demerger mode, and I would think that from a retail perspective, that is something that one can look at. On a more institutional or large-scale sector basis, I think on a 3-year view, I think utilities, power utilities, and perhaps power finance companies are something that one may want to look at, because I believe that many of the orphan new capacity that has come up in the thermal sector will actually begin to find use over the next 6 months to 12 months. Largely because much of the existing utilities that have got, that have become kind of very old are slowly getting mothballed. We've already seen about 3 gigawatts going out in Punjab, and I think that's a trend that will continue because the cost of refurbishment is quite high. So as that happens, I think you will find that both the utilities themselves as well as their financiers suddenly begin to look quite attractive, given that they are right now trading at abysmally low valuations.
Well, Anand, when markets are really correcting, you look for some such stocks and you'll wait for a right level. So do you have anything in mind, any particular stock you'll be watching out for and you'll buy based on these themes you just suggested?
Many of the financiers are somewhat cheap if you are looking at the positive side. However, if the market actually corrects, and I still hesitate to call this a correction, I think the places you need to be short are the ones that are the biggest favorites. And I would argue that auto and NBFCs are two such where you'll make a lot of money shorting them if the market actually were to fall.
All right, let's move ahead and speak about the small cap buzzer of the day. And once again, it is Orchid Pharma, a stock which is buzzing in the market like today's. The stock's rallied nearly 40% in the last 2 trading sessions. The stock has been trading on high volumes, which are 21 times over the past 1 month average volumes. Well, Nikki Merchandani is joining us to take us through more details with regard to Orchid. Nikki?
Navneet, hi. You've put that rightly. Volumes are good enough. The stock is surging on high volumes, which are at 21 times the 20-day average volume. The stock has come down 95% from the all-day high level, but then all-time high level. But if you see, the stock rallied, hit an upper circuit of 20% yesterday after its API facility in Tamil Nadu got cleared by US FDA. On back of that, we're seeing some gains as much as 40% in 2 odd days. However, on the concern side, we're seeing the promoter stake has come down significantly in the past 1 year. From 39% in June 2016, it's come down to 27%. Ratios are negative. Now, please remember that it's a loss-making company. It's a high-debt company. It has a debt around 2,750 odd crore, and the market capitalization of this company is as much as 220 crore.
Well, thanks a lot for that, Nikki. I'm sure, Sudeep, you don't look at Orchid Pharma, but do you look at pharma?
I do look at pharma. And I think, pharma is gaining some advantage. Last few months has been gradual recovery for pharma. Couple of points I'll mention. One, I think rupee depreciation definitely helps pharma. Second, some of the companies have started getting favorable favorable comments from US FDA, which does help. So overall, I think there is a little bit of positive in pharma after a long time. I won't rush to buy the large cap pharma, but there are specialized companies which we have been bullish for quite some time, let's say an Aurobindo Pharma. I think it's a great company to buy even at current levels. It doesn't have the US FDA problem. It has got a great US pipeline. It's not impacted by all these export bans. So I think, but it was beaten down mercilessly when all the other pharma stocks got beaten down. So it's a good script to buy even at current levels.
Okay. That's the view, and you should look at Ipca Lab, because in last 15-20 minutes the stock has corrected further. Stock has been quoting weak since morning, but you look at it now, the stock is now quoting at the day's low, down by around 10% or so. You also have global offshore that we should be watching out for. The stock has corrected roughly 4% over the last few minutes. So these are some of the mid-cap and small-cap stocks where we see the pressure really rising as we approach 330.
Yeah, well, as we approach 3:30, let's get in what dealing rooms are recommending in the session today as well. Darshan and Yatin, as usual, join in with their channel checks. Good afternoon, both of you. Darshan, let's start off with you first. What is it that you're gathering from your dealing room sources?
See, Niraj, at this point of time, a market correction was anticipated, was around the corner. Dealing rooms have been indicating that, but some of the counters in which dealers are talking about, Sun Pharma for one, is something, it's down 1.3% in line with, the market that is falling, but some of the HNIs are accumulating this counter at lower levels. The counter has fallen significantly from the lows, and at this point of time, they believe from the historic valuations that the company had, it's pretty decently valued. So at lower levels, there is accumulation that is happening. The counter which is seeing a lot of pressure in today's trade is Indiabulls Real Estate. It's down almost 9%. a large domestic fund is actually booking profits in the counter. No doubt the counter has been a marked outperformer. From levels of 100, it's moved up all the way to 230, 240 till a couple of days ago. So there is bound to be a little bit of profit booking that will come in, and that's what's happening in India Bulls. And finally, another counter which is down is JSPL. Shanghai, the Ziba steel in Shanghai is down almost 5%, and it has been falling for the past few days. So some of the steel counters are witnessing pressure, and that's the concern with some of the counters like JSPL, which is down in trade.
Okay, continuing with what Darshan was saying about steel, and we have various stocks including Tata Steel which are under pressure, and in general we have seen the metals pack melt a bit, and we have seen generally all these base metals are witnessing some pressure in the international market. So Tata Steel also is one stock wherein domestic funds are said to be sellers, and probably at these levels the selling is expected to get continued. Also South Indian Bank, that is one stock we were talking about it yesterday as well. Today we are looking at almost 6% cut coming in, but there is a lot of interest at lower levels, and dealers are recommending a buy on dips. So this is one stock which dealers like at this point in time. And finally we have India Glycols. That is one stock in the chemicals space wherein dealers are recommending that a few of the HNI clients are expecting a 10 to 15% up move. So watch out for this stock as far as the mid cap space is concerned at lower levels.
All right, Yatin, thanks very much for joining us and giving us all the dealing room buzz. But let's also take a look at some of the cues to watch out for before you can come back for trade on Monday. And to take us through the same, Saloni Dhanuka joins us. Hi, Saloni.
Hi, Navneet. So before talking about the key events lined up for next week, we will be keeping an eye on the OPEC meeting, which is scheduled for tonight in Vienna. Oil prices are of course trading higher as market is expecting a supply cut from this meeting. Also, we'll be looking out for German federal elections on Sunday. It will remain a key watch for overall global markets. Back home on Monday, we'll be keeping an eye on a bunch of annual general meetings. To name a few, Rico India, Mahanagar Gas, Kaveri Seeds, Himachal Futuristic, GTPL Hathway, as well as Divis Laboratories. Some stock reaction could be expected in these stocks. And lastly, Japan is to release manufacturing PMI data. It is an indicator to measure economic health. A reading above 50 indicates expansion, while a reading below 50 indicates contraction. It will remain a key watch for Japanese yen in particular.
Okay, thanks a lot for that, Saloni. Just before we get into the final, the final 8 minutes of trade, let's get in the top closing strategies from our experts. Niraj, to you first. One top call.
That would be a sell on Vedanta with a stop loss at 312 and a target price of 295 in the near term.
Sell on Vedanta. This is an STBT?
Yeah.
Okay. A sell today, buy tomorrow call from Nuresh Mirani on Vedanta. Mukesh, what about you? Your top closing strategy? Mukesh? Okay, I think we've just lost out, Mukesh. Never mind. We'll just get that closing strategy going in just moments from now.
If you could talk about Nuresh, and I would like to take your view. That is India Bulls Real. This stock has crashed 5.5% further loss at this counter. If you look at the movement over last 20 minutes or so, we'll just get that graph. Here it is. IB Real now at 214, down 10.5%. What do you do?
So this has been the way the stock moves. When it moves up, it tends to move up 20% in a week, and when there is a risk of or a trend change in the markets, it moves up in the similar way. So maybe we could be headed towards 200, and that is where it would find some sort of support out there.
It's also an F&O ban, so probably this could be some unwinding as the stock will not be available in the derivative space from December. So just 2 contracts remaining after next week's expiry.
Okay, interesting. One space that we haven't quite discussed today is the life insurance or the insurance pocket. Remember, large IPO closing today as well. Subscribe now, fully subscribe. I mean, subscribe for a while now, really. But interesting one, Pradeep. An expensive place, if you will. It's you now find companies getting the valuations that maybe HDFC Bank used to enjoy after years of performance. SBI Life is a great pedigree management. Probably people will make money, but it's expensive. Some of the others too are getting expensive.
No, I agree with you.
What would you advise?
Well, I agree with you, but it's a play on Indian demographics. I think insurance penetration is very, very low. I think they have a long way to go. And remember, these companies are well established. It's not that they are new companies. They have been operational. They have been performing. And SBI Life has a incredible track record. The way they have been able to use the distribution network of State Bank no other business has been able to use. So I think you have to give it to them. But having said that, I think, of course, it's an expensive issue. It's not that you're going to make big gains on listing. But if you're a long-term investor, I think it's a great place to be in. And I think that's pretty much the case for all the insurance companies which either are listed or are going to come in the IPO market soon. It's a great place to be in a country like India where the demographics favor them and the penetration is
So
low.
between the existing ones, which one do you like? I mean, there's Max, there is ICICI. Well, some of them may be actually we don't have a general, but life, yeah.
Not yet.
Yeah, not yet.
Not yet listed, yeah.
Not yet
We're
listed.
going to soon have it.
Yeah, but what about the existing ones?
Well, I think, the life insurance space, if I have to buy one of the listed, probably I'll go and buy ICICI Pru today. Vis-a-vis State Bank Life, which is still not listed, but assuming it gets listed at the upper end of the price band, I still think price-wise ICICI Pru is attractive.
All right, just 5 minutes to go from market to close. Volatility is only inching higher, but a couple of stocks from the media space which have been outperforming today has been the likes of Eros and TV today. Well, Sudeep, we've chatted about media a lot, but just want to check any specific counter in this space that you like from the likes of PVR or for that matter Dish TV?
Well, I think, if I have to get into the media space, probably I'll go for the exhibitors. Which is PVR, Inox kind of a stock. The Dish TV and the related space, I'm a little skeptical. There is possibility of significant competition coming from the broadband players. So I'll be a little cautious on a long-term basis. As far as long-term is concerned, I think PVR, Inox is a good buy.
They probably don't have the best of quarters, this one. But as Sudeep is saying, these are long-term strategies, not really short-term strategies. I think we do have Mukesh Singh with us. Mukesh, 30-second answer, your top closing strategy.
Finding a buy on this day is very difficult, but since Nifty is inching towards that support area of 99.25, I will go with Mindtree. Mindtree can be bought around this current price of 463.64. Stop would be 455.56, and on the higher side, I am expecting a push towards 475, 480.
Okay, a BTST strategy on Mindtree from Mukesh Singh. Niraj, very quickly, 20 odd seconds. Any other stock that catches your eye that you would want to
I would be going with Vedanta only.
You want to go with Vedanta only. Okay, so Vedanta is one closing strategy and Mindtree is the other one. 327. Let's start wrapping up the markets. And Navneet, let's start off with you first. Suffice to say that all the key indices are showing pain, and the contributors to the indices will not be any different either.
That's right, Niraj. It's not a great closing to this week because the kind of cuts that we're seeing across the board are a little bit scary. Just a data point here, Nifty has seen its biggest percentage fall since November 21st, 2016. And mind you, that was the demonetization month after which the markets recovered. So these are some deeper cuts in the last 6 to 7 months. Nifty finally would be closing with cuts of almost 165 points. Sensex also down about 460 points with about 1.5% cut thereabout. Financials clearly not supporting this market. Nifty Bank has been weak in the past few trading sessions. Today also it's ending the day with the negative note. The broader markets actually saw some deeper cuts. So Nifty mid cap down closer to 3%, small cap, and the Nifty small cap 100 index also closing with cuts of almost over 3%. The market breadth was also not so good, clearly in favor of the declines. But let's also look at a couple of gainers and losers with regard to Sensex today. There you go. Well, hardly two gainers there. That's Wipro and Coal India, but bunch of losers, and the list has been dominated by your metal counters. So Tata Steel ending the day with cuts of almost 5%. You've got the heavyweights like L&T, Reliance Industries all closing in the red. ICICI Bank, another heavyweight on the index, has seen major cuts coming about. In fact, ICICI Bank was weak yesterday as well. From the banking space, State Bank of India, Lupin, Adani Ports, Sun Pharma, Axis, you name it, and all these counters have ended the day in the red, Niraj.
I'm not surprised. Volatility has also had a bit of a leg up in today's session as well, Navneet. So let's bring up some of the key movers and shakers in the session today. So India VIX, clearly one of the key movers in the session today. Remember, volatility edged up in trade yesterday as well, only to fall down post the FinMin clarifications. In today's session, not quite. So a bit of a leg up there to the volatility. What about some of the individual movers in trade? And each of these will come up on your screen. I think we've seen losers from the media pack. We've seen losers from the real estate pack. So India Bulls Real Estate down about 9.5%. Not the best of days for this one. Bring up Ipca Labs, again 10% off. And remember, this is from a strong basket because pharma had a fabulous day of trade yesterday. But in today's session, not quite. Almost all of these stocks have gone down in the session today. Bring up a couple of clusters as well. Nalco moving down about 7.5%. So not the best of days for this one. Similarly, some of the other commodity names, JSPL, I think had a terrible day in trade as well. 7.5% down. And the volumes on this one were fairly high compared to the 10-day average as well. What about some other losers? Reliance Capital down about 8.5%. Reliance Home Finance is the other one. It listed today, but doing okay. You would look at it at 2% gain and think that it's doing great. But remember, the expected listing price was much higher than what it listed at. So eventually, a bit of a disappointment on this one as well. There are maybe a couple of stocks which are bucking the trend. NDTV may be a new suitor. You never know which way the winds will blow, but for now the market seems to be liking it. Actually, not from now. For the last few days, the market seems to be liking it, and that stock is up, as are some of the other media names. The likes of Eros and TV Today are bucking the trend.
Well, if you look at the Nifty chart today, Niraj, there's something interesting. You look at the 10,000 mark. It's not only numerically an important point, but also technically there were important supports around this level. So initially, market was trying to hold the 10,000 level, but when we finally gave in, there was further selling pressure below 10,000 level, and then we also saw volume building up at mid cap and small cap stocks, and a number of high beta counters came down crashing with good volumes. You look at the heat map, and this will actually tell you something. Out of these 50 stocks, only 3 stocks trading in green: HCL, Wipro, and Bharat Finance, and just one more. So this is clearly 47 stocks in red. And among losers, you have metal, Vedanta and Tata Steel. You have bank like Yes Bank. So this story really is across the board. There is selling pressure. Maybe there are a few sectors that saw pressure with good volume like metal and bank, and we'll look at them closely. But I think the first up we should look at the banking sector, because this is the sector that came under pressure. And you look at these contributors and you'll realize that ICICI Bank was actually responsible for a 15 points cut, and HDFC for another 10 points cut in Nifty today. So these two heavyweights together contributed 25 points on the downside to Nifty in today's trade. And look at Nifty Bank, there's a one-way trade, not even one move up you could look at. Every bounce was sold off. And if you look at the components and the contributors, Yes Bank, what is interesting with Yes Bank today is the volume. The total volume and the total turnover at this counter is much higher than the heavyweights like HDFC and HDFC Bank. Of course, ICICI Bank has witnessed higher volume, so that is yet another I think prominent short today or this stock that really saw a lot of selling pressure emerging. We should look at advanced decline, because that is also telling an interesting story. And advanced decline ratios, especially if you look at the stocks which were quoting with good volumes in second half of the day or in the last hour of the trade, we saw selling pressure intensifying further, and we closed the day probably with the worst stat so far as the advanced decline ratio is concerned. Niraj.
Thanks a lot for that, Pradeep. So let's get in closing thoughts from all our experts. And by the way, we have a comment, actually multiple comments, but one of the comments is from Girish Kumar on Facebook, and he's saying, great show, thanks for helping us make some money. Well, I guess some calls given by Nuresh probably work. Tell you what, Girish, if you stay on, and in the next session of this post this show, we'll probably get in some more ideas from Nuresh Mirani as well. But first, final thoughts from our fundamental experts. Sudeep, before we let you go, what's the quantum of downside that one should expect, if at all?
Well, I honestly don't think we will have a downward move more than 5%. So I think if we get 5%, that will be, I think, the end of it. I don't think it's going to go anywhere below that. I strongly believe that another 2-3 percentage points buying will start coming in. There is, believe me, there is enough and more liquidity waiting to get deployed.
So would you concur with this forward message I've got? Don't spend money on Amazon and Flipkart sales. Save money for the Lal Street sale.
Well, 100%. I completely agree. I mean, I'm an equity guy, hardcore equity guy. All of us are. So why waste money on Amazon and Flipkart sale? Buy equity when there is a sale, the Navratri sale going on.
Okay. What about you, Anand? You probably a bit more bearish, but what would your final thoughts be?
As I said, any valuation parameter I use tells me that the market is significantly overpriced. And by significantly, I mean it is 2 standard deviations away from the normal, which means that, it is 99.5% of the time it will fall from here. If there is a correction, and like I said, I'm not convinced that this is the start of a correction, then you should expect to see at least a 12 to 15% fall on the headline.
Wow. Okay. So there is a 5% fall view. There is a 12 to 15% fall view as well. You can pick and choose what you believe. But for now, gentlemen, thank you so much for joining us today and giving us your thoughts. Mukesh, thanks for being with us today on the show as well. We'll see you, of course, next week. Nuresh stays on for What Did You Miss? Gentlemen, thanks for being with us today. Take a break on this edition of Countdown, but do stay tuned. We'll be back with What Did You Miss?
Welcome to What Did You Miss? And these are the top headlines that we are tracking at this hour. Indian markets erased the week's gains this Friday. Nifty falls over 1.5%, while Sensex sheds almost 450 points. The Nifty Metals Index was the worst sectoral performer for the day as global metal prices fall and Hindalco falls the most in over a month. Gold prices recover as investors move back towards safe havens as a war of words break out between Donald Trump and Kim Jong-un. And Reliance Communications lenders reach out to the companies seeking reassurance that proposed deleveraging deals will not be delayed by any recent developments.
Okay, and let's move on to the markets today. The close below 10,000 for Nifty would really be a cause for concern. At least for the aggressive traders, may not be for the positional traders, and they may still want to wait for it. We'll of course discuss the technicals of the market, but just look at the contributors, the stocks that moved up and down in today's trade. There was intense selling pressure at financials, NBFCs and banks. You had Yes Bank, you had Reliance Capital falling with extraordinary volumes at both these counters. And apart from that, you had pressure at metal counters. So Vedanta losing 4% with extremely high volumes. And we also saw some selling pressure towards the end of the day, especially in the pharma stocks that have been actually again in favor for a while now. Divi's Lab finally corrected by 2.5% after hitting 1,000 rupees mark yesterday. Today it closed at 970 odd levels. Dr. Reddy's, Sun Pharma. So across sectors, we could say that there was selling pressure today. And in fact, finally, among 50 Nifty stocks, we had 47 stocks closing in red. So that was a clear signal. Niraj, what was also interesting is the amount of volume that we saw today, yesterday we had high volume in F&O because of the Bank Nifty expiry, but today there was high volume at several counters that fell in today's trade. So there is real supply coming in probably.
Yeah, it'll be interesting to see the fund flow numbers as well in today's session, both the FI, predominantly the DI side. I have little doubt that the FIs would be net sellers today. The question mark is the extent of to which they will be net sellers, or what the DIs do as well. Since Pradeep mentioned volumes, just before I move on to the mid-cap end of the market, pull up what the turnover picture was in the session today. Remember at 2:30 when we analyzed, the turnover was substantially higher. I'm guessing it would have only picked up further in the last 1 hour, and that is very, very high, 7 lakh crores or thereabouts in NSE F&O, and cash as well, 30,000 crores.
It is on the higher side because on a daily basis, the average turnover is around that 5.5 lakh crore.
Okay, so higher turnover as well. So do watch out. It will be interesting to see what the fund flow situation is looking like today. Just a few mid caps, and maybe Navneet will bring up some of the liquid names. But I think in today's session, and again, something that Navneet pointed out, volatility shot up in trade today. But look at the individual names: Indiabulls Real Estate, IPCA, Nalco, JSPL. There's a clutch of names out here which corrected on very, very high volumes. So all of these down anywhere between 8 to 9 to 10%, and the volume picture on almost each of those compared to the 10-day average, very, very high. New kid on the block, Reliance Home Finance, not the most fabulous of listings. Yes, it ended up 2% higher, but it should have listed at a price much higher. At least that's what the market was anticipating. Probably a subdued listing. Reliance Capital was the one that took the hit today, down about 8% in trade. Media stocks bucked the trend, the likes of NDTV, because on all this talk of a new suitor. So that one was up and about in the session today. Others like Eros and TV today, marginally higher, but not so much.
And Niraj, if you also look at the setup, how it's been today, Nifty and Bank Nifty, both these benchmark indices, they breached their 20-day moving average. And every time we've seen a fall coming on, a fall seen in the markets, there has been some sort of buying which has come on the dips. In fact, if you look at the percentage fall that we've seen on Nifty, it is the biggest percentage fall seen since 21st November 2016. Remember, that was the demonetization month. And from December 2016, this rally for Indian market started. And clearly, even if you look at the futures and options data, the expiry is there next week, but the amount of call writing which was seen today was insane, because look at strikes like 10,100. Yesterday that added 10 lakh shares, but today towards the close, I'm sure these figures may change, but it added almost 23 lakh shares, and similar was the case with 10,000 and the 10,200 strike. So clearly call writers who had even written calls yesterday are deep in the money right now. And on the put side, be it put buyers or writers, there was some sort of unwinding seen, and it looks like the put writers were trying to unwind their positions today. And Nifty closing near day's low is not a very positive sign. We breached the 20-day moving average, we breached the 10,000 mark, and the next coming up, Niraj, is the 9,900 mark, which is crucial for the markets.
Well, let's ask Nuresh how crucial it is. He is with us, CEO at Analyze India. Nuresh, thanks so much for staying with us. What's your sense? Is this a start of a deeper crack?
So if we look at a deeper crack, whenever it happens in Nifty, it is generally with global markets as well. So if you look today, none of the global markets actually cracked up like a percentage or something.
Okay.
So most of the global markets, whether you look at Dow Jones or Asian markets or European markets, did not take a much of a hit. So in the near term, there is a support around 9,900 levels. The last bottom is at 9,700 levels. So what we are looking at is a normal correction, and we've not seen a trend change across the world. So if we have to look for a correction of more than 10%, we would see it across the world happening together, because that is how correlated the markets are right now. So I would say current one is a decent enough correction to look out for buying opportunities, particularly in mid caps and small caps if one is looking out, because in the first hit what we see is a lot of mid caps crack down, like say what we've seen today. The mid cap and the small cap indices are down almost 3%. Maybe another hit and they become interesting.
So what is probably happening is a lot of portfolio churning, maybe people getting out of some sectors which are overpriced, like possibly NBFCs, metals, whatever. Is there a good short in this market where one should really exit immediately, if not really go short? So
NBFCs could be one place. Maybe housing finance companies have broken down today. So whether it was a Canfin Homes or LIC Housing Finance, those stocks took a breakdown today wherein they broke the recent lows. So that is where a trend has changed. Maybe a Bajaj Finserv, which has broken down after trying to make a lot of tops around 5,700 odd levels. So that is a place where there could be a further crackdown, because those are the sectors which really rallied well, even metals. So basically when the first crack comes, we'll see stocks which have rallied a lot to correct a lot more in the quickest way.
Okay, Niraj, just one quick word really on banking as well, because I know your broad stance is that this is probably a market which is looking like a buy on declines. Is the same rule applicable for banks? Because on the expiry day, the bank nifty fell a lot. Today, it would have fallen quite a bit as well. Heavyweights contributed.
Yeah.
What levels are you watching out for?
So on the bank nifty, I would still wait out, because bank nifty has not shown as much momentum as the broader market in the real space. So I would be focusing more on mid caps in the current correction, because they have been more resilient over the last few weeks as well as few months. So in the private banks, none of the correction is also great as of now. So maybe when the indices fell by 4-5%, we try to look out for a sector which has fallen 10-12%, and that is where some sort of a pull-up comes in. So as of right now, we are looking at the first crack. So the best way to trade a first crack is looking at Nifty, wherein even if it gaps down, your risk reward is in the sense that you will not see a 5% gap down on Nifty. You might see a 5% gap down on a lot of private banks if you try to do bottom fishing.
One stock in metals that you feel can fall further from these levels?
So that would be Vedanta in that sense.
Yeah. And let me also get your view on two stocks which actually stood out today. One was HCL Technologies and the others was United Breweries. Managed to, close the day in the green. Any view on the charts there?
So if we look at HCL Tech, it has gone nowhere. So it's basically 880 plus 50 points on either side for a really long time. So on a technical term, there is no trend to actually look out for the same. Same is the case with United Breweries. It has been a dead stock in terms of volatility for the last 6 months or so. So maybe they are not falling off, but they are not rallying as well. So on technical terms, we call them very range bound. So we won't be interested. We would be looking at stocks which are trending.
So since you said this could be, just a first crack, which may probably find support, I think pharma has been a stock that has been trading strong off late. So normally you would expect, that kind of a sector to bounce back, to be first to bounce back. Any stock that you will be watching for and specific levels where you would like to come?
So in the pharma space, only stock which has given a strong reversal is Divi's Labs, wherein the reversal has been more than 15% from the bottoms and it has gone all the way to 30-40%. So that is the only stock which has turned up. So maybe even the large cap space like Sun Pharma, till the time it doesn't cross 550, 560 levels, on technical terms you may not call it a reversal. So the only one which has reversed sharply is Divi's Lab and a little bit of Dr. Reddy's. So those will be the two stocks where the reversal is sharp, and maybe those two stocks should be bought on dips.
All right, that's some view on the markets and a couple of individual stocks, but there will be a new kid on the block on Monday when the market opens. Capacite Infra is the new IPO which was subscribed a whopping 186 times, and Nikki Mirchandani is standing by to tell us all about this company. Nikki?
Hi Navneet, we won't be surprised at the premium listing of this IPO given the kind of overwhelming demand we saw for this IPO. The price band was between 245 and 250 per equity share. 400 crore was the offer size of this issue, and the subscription dates were September 13 to September 15. It will get listed on a Monday, that is September 25th. Post the IPO, share promoter holding comes down to 43.79%. as compared to 57.29%, and public shareholding increases to 56.21% post IPO, and before that it was close to 42.71%. If you look at the revenue of around 1,157 crore for the company, margins remain healthy at 14%. Debt to equity ratio has been significantly decent enough for the company. FY13 we saw 1.7 times, whereas that for FY17 was nearly 0.5 times. So fairly a decent ratio out there. So I won't really be surprised if we see some good premium listing on a Monday.
Well, at least that's what dealing rooms and that's what analysts are telling us at BloombergQuint, that the listing could be at a fairly decent level as well. Watch out for Capacite infrastructure. Almost any of these companies which have gotten subscribed well have shown a tendency to list at a fairly decent premium. Speaking of corporate listing or corporate voices, let's also listen into some of the big corporate voices of the day. Bhaskar Bhatt of Titan expects a great Diwali. The new kid on the block, Pratap Snacks, which the IPO which has opened today, looks to expand capacity, while MK Dhanuka of Dhanuka Agritech speaks about monsoon headwinds for the company. Well, I think we will get the corporate voices in just moments from now. But remember, the launch of the festive season offers a good opportunity to check in on consumer behavior that could happen And that is something that I think everybody is watching out for. I mean, whether demonetization and GST will be a reason for sluggish demand, that remains to be seen. As I said, Bhaskar Bhatt has a different say, and he expects that the company will have a good Diwali ahead of the disruptions from the economic reforms. Let's listen in.
Non-clarity in the consumers' minds about the GST rates and 5 rates and so on, which at least our research and consumer talk is indicating a certain reluctance to act immediately. All that should change. As you said, Navratras have started and the festival season is on. But I think company action also matters. So we have gone forward quite aggressively in jewelry, watches, and this new category that you can see here with new products and a whole lot of promotion. So we expect a good Diwali ahead.
So of the fresh issue, around 46 crore will be used to add production line. So by how much will your capacity increase, and is there a demand for this capacity?
I think currently we're running our chips and namkeen at 120% capacity. So we're doubling the capacity of namkeen and adding 50% of chips capacity in Indore.
And is there a demand for this?
Definitely. We're currently running at more than 100% capacity.
And by how much will your top line increase by this additional capacity?
If you see if you can use 100% capacity, what we are adding, we can go up to 2,000 crores.
What were the raw material procurement changes?
We used to buy raw material on a spot basically. Last time we decided that we are losing a lot of money in this. Now we have enough knowledge on the raw material what we buy. So whenever if you use the raw material is down, we try to cover it for the maximum cycle of the time. If you see laminate, packaging film, our the major cost, 15% of our total cost of the revenue, we are covered till March.
Okay.
Edible oil, we are covered for next 2 months.
So what is the comfortable margin level for the company?
I think anywhere between 9 to 10%.
MP is suffering from deficit of water, and definitely the farmers will switch over from wheat to gram in MP state where the water requirement is less. So that switch will happen, and we have number of molecules for sales on gram. So we hope that we will be able to do the desired volumes in MP also, irrespective of deficit of water in MP.
That's what the corporate activity was on BloombergQuint. Let's also take a look at what's kept the dealing room abuzz today. Yatin Mota is standing by with all the stocks that are recommended by dealing rooms for Monday and the week ahead.
Thanks for that, Niraj. Of course, we were talking about metals a few time back, and weakness in international base metal prices and steel prices clearly are indicative of the fact that from current levels, the kind of move that we have seen in most of these steel stocks and metal stocks is cooling off. So we had the likes of Tata Steel, Nalco, GSPL cooling off in trade, and dealers are expecting that this sell-off or profit booking in metal stocks will continue next week as well. So watch out for the entire metals pack, cut anywhere between 5 to 8%, and that is how steep the correction in metals was. So metals is one pack wherein dealers are expecting profit booking. Also IT stocks, so on the contra side, we have the rupee which is weakening and US dollar which is gaining. And probably, now the trade is, given the fact that IT stocks are beaten down so badly, it's time for some kind of a rebound similar to what we saw in the pharma stocks could be repeated in the IT stocks. So the likes of Wipro, HCL Tech, dealers are recommending that these are the few stocks wherein there could be some buying action moving forward. And watch out for First Source Solutions in the mid-cap space. Dealers expecting that the kind of HNI orders which are lined up could mean a 10 to 15% short-term upside for the stock.
Thanks, Yatin, for getting us all the details. But before we get you all the key events to be watched out for Monday's trading session, let's look at one of the stock which was buzzing not only today but in yesterday's trading session as well. And I'm talking about Orchid Pharma, a stock which rallied today about closer to 11 to 12%. Yesterday, it was locked on upper circuit and it has been moving higher on very high volumes as well. In fact, if you look at the volumes today, were 21 times over 1 month average volume that we've been seeing for this counter. And the stock has been moving up. There was a news that there was some inspection which has taken place, which was favorable for the company. Precisely on back of that news, there has been some buying interest which has been coming about, but there have been some key concerns. If you look at Orchid Pharma's counter, the promoters actually, they've been decreasing their stake in the company, and now the promoter's stake is down to nearly 27%. It is a loss-making company with negative return ratios, and also if you look at the market cap, it's about 220, and the company has a debt of almost 2,750 crore. So net the enterprise value of this company is nearly 3,000 crore.
Well, that's interesting. Amongst the day, in a day wherein we've had a bunch of these pharma names coming off, there was this one Orchid Pharma which has done very well, because Ipca was up 16% yesterday, if I'm not wrong, and has corrected today. A couple of other pharma names came off as well. So a really good week for pharma, marred by what's been a final Friday of sorts. I don't know, I couldn't think of a negative word from F. But Naresh, any of the pharma counters? I mean, they were having a good run.
So out of the pharma, as I said, Divi's Labs and Dr. Reddy's are only the ones which have turned around technically. None of the other names have actually turned around on technical terms, wherein we look out for a 10 to 15% bounce from the bottoms with a strong move. So Divi's is the only one which has moved up strongly from the bottom at 550.
But that has rallied quite a bit.
Yeah.
So can you take a trade here?
Yeah, so that would be the trade. Every dip would be a trade in Divi's Labs and Dr. Reddy's. And maybe when we start crossing 550, 560 levels on Sun Pharma, that is where we start saying Sun Pharma has also bottomed out.
But do you think the sell-off is over now in the pharma counters, or there could be further pain?
So what happens is, after a long-term downtrend, it takes a lot of time to take a turnaround.
Right.
So if you look at a lot of stocks, whenever they see a multi-year breakdown wherein they've fallen 30-40% from their peaks, it does not turn around in 3 months or 6 months. So sometimes it could take longer. So the only ones which have turned around are Divi's and Dr. Reddy's. We would wait for signals across the board in terms of a major turnaround.
So you'll go with the leaders for now?
Yeah.
Well, one sector that probably remained positive, most part of the day, or most stocks, I would say TV Today Network, NDTV, Eros, the media sector was buzzing. Do you think there is a trend here, or it's just one-off?
So NDTV is anyways an illiquid stock otherwise, and it has been a long-term downtrend, and a few days move could not change it. So TV Today in the near term has seen very huge volumes from sub 300 levels. The stock has bounced back, but it's still not a trending stock in terms of long term. So maybe the only one which has seen a huge volume action also is TV Today. The rest have not seen volume action per se. So NDTV is on a circuit directly without seeing any great volumes, maybe on a buzz of a news. So the only one which looks interesting as of now is TV Today.
By the way, we missed out, at least I personally have missed out on talking about the cement counters. But I was just looking at the weekly performance, and amongst the top losers this week have been ACC and Ambuja. They have been down 5% and 7% apiece. We talked about commodities and banks. Cement, Naresh, has been a very weak space.
So if we look at cements, ACC and Ambuja both came to very close to their all-time highs, but we did not see a follow-up move in the near term. We just saw a little bit of an uptick to the new highs, and we've seen a correction. So we believe overall, in the short term, maybe we are seeing a correction, but the long-term trend remains still positive. So maybe the next time when it crosses new all-time highs, that is where they'll become interesting. So as of now, they have not done the follow-up move which we need.
Okay. On the positive side, ITI, second day in a row, we saw 17% gain at this counter, and I don't think it really came under pressure any time during the day. Yesterday, the stock hit 20% upper circuit, and we also spoke to the management in this show, and they really said that it could be over a period of 2 to 3 years that they hope to gain roughly 2,500 to 3,000 crore rupees in revenue. How does this stock look on charts? Is it still promising, or do you think this has been a one-off move for 35%? Is too much now for anybody to enter?
So what we've started seeing is across a lot of PSU smaller names, we've seen strong price and volume breakouts, like say Tourism Finance Corporation. So 100 to 130, we thought it is done. So, and we've seen it move to 170. Same as the case, ITI did a 30% move in the last 2 days. Maybe, but that tells you something when the markets are also in a correction mode. A stock breaks out with huge volumes. Even if there is just a buzz of some news, but volumes tell you the momentum is strong.
Is there a way to, trade them on the basis of charts, or you have to completely rely on the news coming from Delhi?
When the volume comes in, you have to enter really fast. So for example, day before, the stock broke out and went to a 20% freeze. So it did not give you many hours also to react. So it's something for a momentum trader who's very quick to react.
Okay, on to the events that will move markets on Monday. Saloni Dhanuka is standing by. Saloni, what are we watching out for?
So Niraj, before talking about the key events lined up for Monday, we'll be looking out for the key developments from the OPEC meeting scheduled later tonight. Oil prices have been trading higher in the expectations of a supply cut during this meeting. So we'll also be looking out for German federal elections scheduled on Sunday. It will remain a key watch for global markets. Back home on Monday, we'll be keeping an eye on a bunch of annual general meetings. To name a few, Rico India, Mahanagar Gas, Kaveri Seeds, Himachal Futuristic, GTPL Hathway, as well as Divis Laboratories. Some stock reaction could be seen there. And lastly, Japan is to release manufacturing PMI data on Monday itself. It is an indicator to measure economic health, and a reading above 50 indicates expansion while a reading below 50 indicates contraction. So it will remain a key watch for Japanese yen in particular.
All right, Saloni, thanks a lot for bringing us all the key events that will be in focus over the weekend and for a Monday's trading session. Well, let's get a commodity link going then. Are we ready for it? Before we wrap this show, we'll get you some commodity check on the commodities market as well. And joining us is Jayesh to take us through the same. Jayesh?
Good afternoon, Navneet. Some mixed cues coming in for the commodities market. Starting off with the precious metals, gold has inched towards the 1300 mark post the North Korea and US tensions have seen an escalation. Moving on to base metals, that is where the pressure has been seen. So Shanghai Futures Exchange, most of the base metals were down 1 to 3%. But a specific comment and an interesting one coming in from Commodities World Capital on aluminium. They say that aluminium is at near a 5-year high, but still has more room to go. On the other hand, iron ore in Dalian Exchange has also led to the longest weekly slump that we have seen since the month of April. Moving on to the energy space, that is the one that we'll be closely watching and monitoring for you. Will be the OPEC meeting, which is scheduled later in the day, and at 9 a.m. At 2 a.m. Indian Standard Time is where we are expecting that the outcome will be there. So what is likely to happen is that the OPEC members are going to meet to mull over whether they have to extend the output curve that they have imposed of the 1.8 million barrel. On the back of this, as far as price is concerned, oil prices have steadied at the $50 mark, and we are also headed towards the third weekly gain. We are watching out for the OPEC comments coming.
Okay, thanks a lot for that, Jayesh. Let's get in some final recommendations and thoughts from Naresh Medani. Naresh, couple of stocks, or maybe one stock that people should watch out for come Monday morning.
So one of the stocks which I like is Tata Chemicals. The stock has dipped back from 660, 665 to a zone of 615, 620. That is where the last huge price and volume take happened, around 600 to 620 zone. So that is where we have a retest of the zones. From here, maybe we could look back towards 660, 670 in the short term. So that's a stock on radar.
Fair call. Naresh, thanks so much for being with us today. Really appreciate you taking the time out and joining us in an inaugural week and all
the best
session of What Did You Miss? Thanks so much. Appreciate that. But with that, it's a wrap on this session or this leg of What Did You Miss from Navneet, Pradeep and myself, Niraj Shah. Thanks so much for watching and have a great weekend.